Into this deep dive, and something tells me a lot of you are really gonna get a vibe with this one. We're tackling cash flow.
And not just the surface level stuff. We're going deep, folks, because a lot of you, you get it, money in, money out. But this is about the nuances that really make a difference.
Yeah, and we've got a stack of sources for this one. Articles, reports, even a fascinating case study that, well, let's just say it really highlights why cash flow mastery is the name of the game.
Absolutely. I mean, think about it. You can be profitable on paper and still go bankrupt. Remember Company X that our source mentioned? Cautionary tale right there.
Whoa, okay, so we're already busting myths right off the bat. It's not just about making money, it's about, what, managing it, timing.
Yeah.
Our sources kept hitting on that.
It's like, imagine, those high-end restaurants. Book solid every night, right? Sounds great, revenue's pouring in, but what if most of their clients are all about that dine and dash life?
Oh, no. Disaster.
Exactly. It's not just about the promise of money, it's about having it when you need it. Bills don't wait for potential revenue to roll in.
Makes you think twice about those pay later apps, huh?
Well, no.
So, okay, let's break this down. Our sources kept mentioning these three main types of cash flow: operational, investing, and financing. I'll be honest, those used to sound like, I don't know, accounting jargon to me.
Oh, they're much more than that. Think of them as action categories almost. Operational, that's your day-to-day, the bread and butter. For our restaurant, that's the money from actually serving meals.
Okay, makes sense. Then there's investing. That's what putting money back into the business.
Exactly. Like upgrading to fancy ovens so you can handle more customers faster. It's an investment in future earning power.
And financing. This is where it gets interesting, right? Like how you get those big moves happening.
Exactly. It can be the secret sauce to rapid growth, but it comes with, let's call them, caveats. Our restaurant needs that initial loan to even open its doors. They're betting on their future operational cash flow to not just cover that loan, but to actually grow beyond it.
This is giving me business thriller vibes, except instead of car chases, it's all about managing these cash currents.
Mm-hmm.
And this liquidity thing our sources keep mentioning, that's where it gets real, right?
Oh, 100%. Liquidity is like having enough in your checking account to cover bills without breaking a sweat. You could have the most impressive-looking company on paper, but if you can't pay your suppliers next week, game over.
Makes you think, right? Like, it's not even just about having the cash, it's about having it at the right time. That's like next level strategizing.
It's crucial, and honestly, a lot of businesses learn this the hard way. Remember that software company from the case study? They had this killer product, everyone wanted it, but they almost went belly up.
Yeah, that was wild.
Yeah.
Their growth was so explosive they couldn't keep up with, well, everything else. Like, they forgot to build the plane while they were flying it.
Perfect analogy. They were so focused on acquiring new customers, they didn't have the systems in place to actually handle the increased demand. Billing, support, even just fulfilling orders, it was a mess.
It's like that saying, be careful what you wish for. They wanted to be the next big thing, and suddenly they were. But without the cash flow to back it up, it almost backfired.
And that's where cash flow management comes in, being proactive. It's like you don't wait until you're drowning to learn how to swim, right?
Our sources were all over that you can't just wing it.
Yeah.
So what's the key? How do you actually manage something as, I don't know, seemingly unpredictable as cash flow?
It starts with having a plan. Our sources were big on forecasting, like having a financial weather report. If you see a potential cash crunch coming, you can prepare for it.
Okay, so instead of freaking out when the metaphorical rain starts, you've already got your umbrella handy.
Exactly. This could mean, maybe you tighten up your spending a bit, or you negotiate better payment terms with your suppliers. Even an extra week or two can make a difference.
Gives you some breathing room. See, now that's the kind of practical stuff I need. And speaking of breathing room, our sources kept mentioning debt, which always makes me a little, I don't know, nervous.
Debt gets a bad rap, understandably. It can be risky, but it can also be incredibly useful if you're smart about it.
So when is debt actually a good thing for cash flow?
When it enables you to capitalize on an opportunity you couldn't otherwise, let's say you're that software company again.
Right.
Huge order comes in, but you need more servers, more bandwidth, whatever, to actually fulfill it.
Makes sense. You got to spend money to make money, as they say.
Exactly. Taking on some short-term debt to meet that demand could be the right move if it means securing that big sale and ultimately boosting your cash flow down the line.
It's about making sure the reward is worth the risk and that you can actually handle those loan payments. Speaking of which, our sources also highlighted how important cash flow is for us investors, especially during those volatile times in the market.
Absolutely. It all ties together. For investors, cash flow is like having that financial cushion. Let's say the market takes a dip, right? If you're relying on selling your investments for income, you might be forced to sell at a loss.
Oof, that's the opposite of what we want.
Right. But if you've invested in things that generate regular cash flow dividend stocks, rental income, you've got options. You can ride out the storm, even reinvest those dividends while prices are low.
Okay, so it's like having an emergency fund, but for your investments. Gives you that peace of mind to not panic and make emotional decisions. This is great. So we've covered why cash flow is so important for businesses and investors alike. But this wouldn't be a deep dive if we didn't get practical. So let's get down to brass tacks. How do we become cash flow ninjas?
You know, it can be surprisingly simple stuff. Our sources were really big on this idea of like speeding up how fast you get paid. They called it tightening the cash conversion cycle, but
Yeah, let's keep it real, Will, please. What's that actually mean for, like, someone running a small business day to day?
it's all about that moment you make a sale. Awesome, right. But that money isn't really yours until it's in your account. So invoice promptly. Don't sit on those invoices. Maybe even offer a small discount if they pay early. A little incentive goes a long way.
And not to be a nag, but I'm guessing those gentle reminders matter too.
Oh, absolutely. Don't be shy about following up on those overdue invoices. Sometimes you got to be a little,
Squeaky wheel.
there you go. And while we're talking about money coming in, don't forget about the money going out. Negotiating better terms with your suppliers, even just getting an extra week or two to pay, it can make a world of difference.
Air to breathe.
Mm-hmm.
Gives you that buffer. And on that note, something our sources kept coming back to was the smart use of debt, which I gotta say, that phrase always makes me a little twitchy.
It's understandable. Debt gets a bad rap, and for good reason sometimes. But it's like, I don't know, fire. You don't want to play with it, but used correctly, it's incredibly powerful.
Love the analogy. So when is debt actually doing good things for your cash flow?
When it lets you grab an opportunity you wouldn't be able to otherwise. Like, picture that software company again, right? They get this monster order, could be a game changer, but they need more everything to handle it. Servers, bandwidth, the works.
You gotta spend money to make money. Classic dilemma.
And sometimes taking on a bit of short-term debt to meet that demand, it's the right call. As long as you know that big sale is coming, and that'll boost your cash flow in the long run, it's strategic.
It's about being sure the reward's worth the risk and that you can actually, handle those loan payments when they come due. Now, on the investor side of things, because our sources definitely weren't leaving us out of this, they made a big deal about how important cash flow is for us too. Especially when the market's being, well, the market.
Totally. Because for investors, think of good cash flow like having that extra layer of padding, when things get bumpy. Let's say the market takes a dive. If you're relying on selling your investments to actually live, you might have to sell at a loss, and that hurts.
Yeah, nobody wants that fire sale situation in their portfolio. Stressful.
Exactly. But if you've built things up smartly, if you've got investments that generate their own regular cash flow, dividend stocks, rental properties, things like that, you've got choices. You can ride out the storm. Heck, you can even reinvest those dividends while prices are low.
So it's kind of like having that emergency fund, but it's for your investments this time. Keeps you from making those panicky moves. Wow, this deep dive has been amazing. We've gone from basic money in, money out to understanding the timing, the strategy, the whole game.
Couldn't have put it better myself. Getting a grip on cash flow is like having a superpower, whether you're running a business or growing your investments.
So for our listeners out there who are hopefully just as fired up about this as we are, what's the one big takeaway you'd want them to remember?
It doesn't matter if you're running a company, building your portfolio, or just trying to manage your own money well. Cash flow is king, plain and simple. Treat it right, and it'll treat you right for years to come.
Couldn't agree more. Well, this has been fantastic. Thank you so much for joining me on this deep dive. It's been enlightening.
My pleasure. Always happy to geek out about this stuff.
And for everyone listening, we hope this has given you some serious tools to level up your own cash flow game. Because even small changes can make a huge difference over time. Go forth and prosper, everyone.